Hey guys, in this video we'll be going through a suburb in New South Wales regional area where you can buy a property for under $400,000 and it will most likely give you some really decent growth both in the short term and in the long term. So if you're in Sydney, let's say, or anywhere really, and you're wanting to buy affordable properties, areas where even with interest rates rising, they're not really going to crash at all, then carry on watching. Okay, my name's PK and I help people do exactly this, what I'm just showing you. This is just a snippet of the type of stuff that I help people do and what investors do. This is very surface level, but I want you to get some free insights, really. So stick around, it's not going to be too long. So this is the area that I'm talking about. All right, so this is Sydney, this is Newcastle, this Upper Hunter area. If you go into Upper Hunter, you see areas like Scone, which is really the main regional center in the Upper Hunter area, and then Mariwa. We're going to be talking about Mariwa today. It's not too far from really what is a booming area. Okay, Newcastle, we all know how well it's done. I have properties there myself. We were buying a whole bunch in Cessnock over the last 5 years, and places like East Maitland, Beresfield. All these areas have had a tremendous population boom in the last sort of 3 to 4 years. And then as you go out across this highway, this yellow line, you approach the Upper Hunter area. So we know how unaffordable and how much of a boom the Lower Hunter area and this area around here and then around Gosford has experienced, also where I have a property. But this is an area around the Upper Hunter which still has some tremendous possibility. Okay, so let's just go through some key things. It's an inland rural area of west of Port Macquarie. Okay, population is 14,000, so it's not for everyone. It's not like anyone and everyone should just be putting their money here. It's probably, none of this is financial advice, but it's probably for those who already have maybe 1 or 2 or 3 properties and have a little bit higher risk threshold. Okay, so it's not it's not like we just invest in rural areas like this, by no means, but I'm just giving you a bit of a snippet of the type of analysis, the type of area that you could find for yourself if you had the risk tolerance. The unemployment rate is 2.4%, okay, last year. Now that is one of the lowest unemployment rates nationally, okay, even better than New South Wales, okay, and they didn't really experience a whole bunch of COVID effects there. So one interesting thing to note is that in the last 10 years, the Upper Hunter area has not really done that well, okay. Vacant land has increased by 50%. Median house price has gone up by 16%. So you might be thinking, why invest in an area that's not done well? And a lot of property experts or people that are trying to sell you stuff are going to say you need to buy in an area that's already performed well, that has a consistent history of performing well. In fact, that's not always the case. Sometimes it's areas that haven't performed well that start to perform well because something has changed, like infrastructure or population or something like that. Not that those are the only important things. And sometimes you've got areas that are, grown fantastically well that for the next 10 years don't grow fantastically well. Think Sydney up to about 2012 for the previous 10 years was pretty much dead, right? But leading up to the end of the last century, it did tremendously well. So you have to kind of look through those things. It has experienced a really good yield. Okay, 6.1% is fantastic. It's obviously better than most places across Australia, and the vacancy rate is tremendous. Now, none of these factors alone mean that we should be buying there, but I'm just giving you a kind of a sprinkling of the types of attractive features that this area has. All right, it's very affordable. In this PRD report, which I'm reading from here, it's one of the 10 top most affordable areas in Australia. So in this area, if interest rates go up 1, 2, 3, maybe even 4%, people don't need to sell their properties. In fact, they're not financially burdened really much at all. Now, the main thing that I love about the Upper Hunter area or the local government area is it's going to see more than $200 million of development through this year. It's already started. Okay, and basically no residential development. Okay, only $1.25 million of residential development, and that's basically just 5 units that are being built. So it's just like one developer who's spending just over $1 million to build 5 units. Okay, basically nothing. Okay, so buyers must act quickly because there's really good demand versus supply here, and the level of affordability is just profound. Let's go down here, area sales. So you can see that the vacant land sales have just been trending up a little bit. Nothing really to concern with. House sales have been increasing. I've mentioned before that just because sales activity increases doesn't mean that prices increase, but you can see that, stuff is happening there. It's on the radar of people. And now if we come over here to the key stats, the median house price, 370. Okay, this is really, really interesting. And it hasn't actually gone up. Most good areas, like if you had bought a good property 12 months ago, it should have gone up more than 40 or 50% this year. If you've used a buyer's agent or whatever and it hasn't done that, then you've not really done that well, because the average property's gone up about 25%. So you should have beaten the average by a long way. This hasn't done well, but it's going to be the time where it starts to shine, okay? Land value is really good. Vacancy rate, like I said, very good. Yield, very positively geared. Territory units, even more so. This is what I love. More than 200 millions in commercial developments. Basically, no new housing supply. When housing supply increases, it creates a glut, and therefore prices don't increase. That's not the case here. There's lots of price pressure. Economy is doing really well. And 5-year population growth is negative. You might see that to be a bad thing, but actually, it's all supply and demand. There's no new houses there, and the incomes are increasing. You can have areas where population goes backwards, like Burnie in Tasmania, for instance, but incomes increase and house prices go boom. Like Burnie's gone up 40, 50%. Okay, and then the last thing I want to show you is this specific town called Mariwa. Okay, so it's not for everyone, like I said, and don't just think that I only, or we, or our clients only buy in super regional areas. We don't. In fact, this area is really, really small. It's not for everyone. Mariba has less than 2,000 people there. So it has to be, right for your risk appetite to buy there, but it's more likely than not to be a growth area with fantastic positive cash flow in the short and long term. Like I said, not financial advice or anything like that, but try to educate yourself from what I'm saying. In the last year, prices have gone from about 260 to just over 300. So it's moving. Okay, it's moving. Now, the reason I shared with you this suburb and a bit of an explanation, and there's 30 to 35 factors that we look at when deciding where to buy. The reason I shared with you this is to already demonstrate that what you're doing in terms of finding a suburb, your next investment location thesis, you may not be doing enough analysis. Okay, this is not even starting to scratch the surface. Okay, so yes, you can buy here if you want. I'm not telling you to buy there, nor am I saying not to buy there. It will likely do quite well, but this is some of the type of analysis that you need to do, not necessarily on these sources, but sources like these, to actually make a sound investment decision. Don't just go by a hotspot report. Don't just go by off what some guy on YouTube or Facebook is saying. Don't just go off an article of the top 10 suburbs to buy in. Don't just go off a buyer's agent or a course provider just because they're a quote unquote expert. The most important real estate is the 6 inches behind between your two ears, and you should invest in that real estate first. Okay, that's the principle, that's the moral of the story. If you want to do that, I'll leave links below to the Facebook group, 15,000 people, they're amazing property investors. My podcast, just get a whole bunch of free education and learn how to do this. At least try. Okay guys, my name's PK, hit the subscribe button, give the notification bell on, and give this video a thumbs up, a like. I'd super appreciate it. My name's PK again. I wish you genuinely all the very best. Catch you later. Bye.